welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this fresh new day as well. Remember, the Nifty is at a 1 month high, and more so, it is back at the week's high of 25,330, which it has been finding it very difficult to cross. But let's see whether this time around things change in the run up to Dhanteras and Diwali, and the festive spirits drive it further too. Remember, the index to be watched out for today again is going to be the Nifty Bank. Axis Bank has reported healthy quarter numbers after the market hours yesterday, so the banks will be in focus yet again. This will be one earnings reaction to watch. Also, the Nifty Bank is just about 850 points away from its recent record high of 57,628. So this will be definitely one index. Of course, apart from this, earnings reaction will also come in from HDFC Life, HDB Financial, L&T Finance, also Angel One, Oberoi Realty, and some of the other IT numbers like IT Wipro, they will be also reporting their numbers. So IT sector will also be in focus. Remember, along with it, stocks like Eternal, Nestle, LTI Mindtree, Geo Financial, Vikram Solar, Vari Energies, these will all be the names that we will have to watch out for in terms of the earnings information that will be coming in. Now, of course, we will also be finding out how trading setup is as far as the overnight trade is concerned. Now, for the Wall Street, we've actually seen the major indices close broadly higher, with Morgan Stanley, Bank of America rallying after reporting solid quarterly earnings. We've also seen that investors have continued to monitor the rising China and the US trade tensions. The broader S&P 500 index that settled higher by about 0.4%. Tech-heavy Nasdaq about 0.6%. Of course, we've also seen Dow Jones also edge down by a flat 0.04% in trade. What happened in the Asia markets this morning is that across the board, we've seen most of the markets trade higher. And Nikkei was up by about 1%, ASX 200 up by about 0.1%, and Kospi also about 1% higher. And Gift Nifty is also indicating a positive start, at least at this point in time as well. What we're also given to understand is that the foreign investors, they've also net bought a minuscule amount, 161 odd crore rupees in yesterday's trade. Meanwhile, DIIs have net purchased stocks worth about 4,492 odd crores. But we'll have to see whether there is any sign of a turn as far as the FI purchasing is concerned, or is this just a one-day move that we have to take it with a pinch of salt as well? But let's welcome our guest on board. We are going to be joined by Mr. Devin Choksi, the MD of DR Choksi Finserv Private Limited, very shortly. And we're going to be going to him to understand, what does he feel about the markets? And of course, as we inch closer to Diwali, what is the outlook for the new Samvat? If you are supposed to create a portfolio, for the new Samvat year, where is the outperformance that you can start betting on and accumulating into stocks right from now as well? But let's first focus on the key stocks that you have to focus on today. Of course, like I said, Axis Bank. In its Q2 results, Axis Bank has reported a 26.4% decline in net profit. That's coming at 5,089 odd crores. Now, what we are also given to understand is that the NII has risen by almost 2%. And asset quality has improved. Gross NPA now at 1.46% and the net NPA at 0.44%. So that's improved. Broadly, a positive set of numbers. We also have some brokerage coverage on Axis Bank that we have. For instance, CLSA on Axis Bank has an outperform rating with a target price of 1,400 now. It actually believes the profit before tax has been adjusted for one-offs and was 3 to 4% better than the estimates, driven by primarily better NII and PPOP as well. And they also believe Q2 was a quarter which indicates a change in trend as well. That's something that they're watching out for. Bernstein, on the other hand, has also come out with a report on Axis Bank with an outperform rating there and a target price of 1,250 rupees as well. Now, remember, this has been reported in Q2 with growth metrics showing sequential improvement and asset quality witnessing a sharp recovery. Slippage is also declining meaningfully sequentially. This is what they're betting big on. And they've also marked out that while the credit costs remain elevated, albeit the lower than previous quarter, this is largely due to one-off provisions on as far as the agri advances are concerned, that could reverse in the subsequent quarters. Also, encouragingly, underlying trends such as lower slippages and improving card additions is something that they are also positive on as far as the Axis Bank numbers are concerned. Let's focus on L&T Finance. Again, in Q2, in the consolidated numbers on a YOY basis, year-on-year basis, profit has increased by 5.6% at 734 crores. Revenue has climbed 7.9% to 4,335 odd crore rupees. That's another number from the finance space that you need to watch out for. Let's also look at Oberoi Realty. Now, remember the developers. Consolidated YOY net profit has surged by 29% to 760 odd crore rupees. This is on the back of project deliveries, while revenue has also jumped by 34.8% to now 1779 odd crores. That's another number that I will be definitely watching out for. Let's also look at another stock that we have, and this is Hero MotoCorp. The company has announced, its official entry into the Spain market in partnership with Noria Motors, part of the Onyx Group, and it has introduced its range of Euro 5 Plus compliant models in the region already. So expansion plans globally as far as Hero Moto is concerned, and that's definitely in focus at this point in time. KEC International is also going to be in focus, viewers. This is as the company is backed on order worth about 1,038 crores in the international T&D business, and that's something that we will be watching out for. The stock has been up and about of late with a lot of order flows, and of course, recently the numbers also coming in. We also have Rain Industries that's going to be in focus. It's the company's arm has partnered with Green Graphite Technologies to develop sustainable battery, material solutions as well. That's going to be keeping the stock in focus. Let's also focus on some more numbers that have come in. HDFC Life is something that I'm waiting to look at. The company's Q2 consolidated YOY profit has grown by 3% to 448 odd crore rupees, and from 3435 odd crore rupees, supported by 13.6% rise in premium income to 18,871 crores. That's something that we are watching out for. The other bit is as far as Jyoti Industries is concerned. That's another stock that you can keep in your mind today. The company has received a 288 odd crore rupees order from AESL projects for tower supply, survey, foundation, stringing, commissioning, and this is going to be in the Fatehpur transmission line. So the company is going to be in focus there. Two more numbers and three more numbers, in fact, that I'm going to marking out for you. Angel One from the stockbroking space. Q2 consolidated YOY numbers, they have reported a sharp 50% decline in profit to 211 crores. And as the market activity has moderated amidst all of this consolidation, revenue has also slipped by 20.7% to 1,201 odd crore rupees due to lower trading volume. So keep that in focus. Now, apart from this, HDB Financial Services, the first time around after earnings, Q2 YOY profits have declined by 1.6%, coming in at 581 crores. NII, that's the net interest income, has surged by 19.6% to 2,192 odd crore rupees. However, the loan losses and the provisions have jumped sharply by 73.5% to 748 odd crores. That's something that you should watch out for. Let's also look at Huhtamaki India. For Q2, again on a year-on-year basis, the packaging firm's profit has jumped by 214%, coming in at 36.8 crores. This is even as the revenue has slipped by 4% to 624 crores. The profit was aided by lower input cost and operational efficiency. Watch out for Huhtamaki India and the outperformance on the basis of the bottom line jump that we have seen there. Now, BEL, that's going to be in focus. The company has also secured additional orders of 592 odd crores since September 29, including projects of tank subsystems, communication equipment, ship data networks, covered train collision avoidance system. All of these have also been coming into focus as well. Some more numbers and kind of news flow stocks that you should keep in mind from the Adani Group. Keep an eye out on Adani Green Energy. For the first half of financial year 2026, on a year-on-year basis, the operational capacity for the company has grown by 49% to now 16.7 gigawatt, while the greenfield capacity additions now stand at 2.4 gigawatts versus 0.25 gigawatts a year ago. Sale of energy has increased 39% to 19,569 million units as well. Let's also look at some of the other numbers. Now, we have IEX. The SEBI has unearthed insider trading transactions worth over 173 crores in the company shares after detailed investigation and search operations conducted around a month ago. So keep that in focus too. We're also going to be looking at Delta Corp. That's the last number that I'm watching out for in terms of Q2 numbers for today. And that's with regards to the profit, which has slipped 7% year on year. Consolidated basis coming in at 25 crores. Revenue is flat at 182.8 odd crore rupees, reflecting subdued gaming activity. Remember, in the recent past, we've also seen a lot of regulatory action as far as the online gaming activity is concerned, not so much for the offline activity as well, as far as the company is concerned, but we'll find out what exactly happens on these accounts as well. Let me also highlight a few brokerage houses updates that you must know. I've already pointed out Axis Bank brokerage houses after the earnings, what are they saying, but let me also mark out for you as far as Hyundai is concerned, from the auto basket. Now, Morgan Stanley has actually come out with a report on Hyundai. What does it say? It says we have an overweight rating. It also says that we have kept a target price of 3,066. They believe now, after, remember, we have been marking out for you on Business Today that Hyundai is talking about its expansion plans, doubling down their investments as far as India investments are concerned. Now, on the basis of whatever the company has announced, Morgan Stanley has an overweight rating, a target price of 3,066. They have said that by 2030, Hyundai India will actually become the second largest. India will actually become the second largest market for Hyundai Motor Company after the US, and this is with a 450 billion rupees capex. That's 45,000 crore rupees capex. Several new nameplates, multi powertrain strategy, luxury foray via Genesis to drive growth. Tarun Garg has now taken up as the MD and the CEO of Hyundai Motor India. FY 2030 revenue guidance of 1 trillion rupees plus definitely looks conservative to Morgan Stanley, and even then they have this outperform rating and a target price of 3,066, as we are given to understand at this point in time as well. Let's actually look at what's happening on the rupee level and on the pre-market level. Rupee has opened at 87.81 versus the close of 88.08. So slightly better off in terms of the kind of opening that we are seeing. Rupee has now in fact opened at nearly 2-month high against the US dollar. So sharp improvement there overnight as far as the rupee is concerned, is what we are given to understand. At this point, when we talk about the Nifty, 25,352 is what is being indicated, about a 35 point of an uptick, and this will settle in the pre-open at 908, and we'll try to find out what exactly happens on that front. Apart from this, keep an eye out on also the brokerage house report on HDFC Life. Now, this is Jeffrey's report that we have on the life insurance company. They have a buy rating, a target price of 930. They have said that the Q2 value of new business of 10 billion rupees or 1,000 crores is up by 8% year on year. It was a tad ahead of estimates with better margins. Their APE growth was soft at 9%, led by ULIPs and protection. They also expect growth to improve as base normalizes for December quarter and competition has realigned pricing for non-par savings products. Also, margins for second quarter FY26 will fall slightly due to impact of GST and expect normalization from FY27 is what they are given to understand. Let's talk about HDB Financial, another company that's going to be extremely important to watch out for. Remember, the first time around the earnings are coming in after HDB has got listed in the stock exchanges. Morgan Stanley has come out with a report on HDB Financial. Equal weight rating, a target price of 805. They believe PAT has beaten their own estimates. On 6% operating profit, there is a beat. Higher NII and lower operating costs is also something that they are positive on. Credit costs, bad loan formation, write-offs were elevated, but stage 2 was stable Q on Q performance, and that's what they are still positive on. Now, Jeffries on HDB Financial has said, we will give you a buy rating and a target price of 900 based on the Q2 profit. that was slightly lower, 2% lower year on year, and therefore a 2% miss versus Jeffrey's own estimates. And miss in also lending PAT, a 5% due to higher provisioning was offset by the higher BPO PBT. Also, the AUM growth moderated 13% year on year, but NIM has surprised positively. So it's a mixed set of numbers for them. They still have a buy rating and a target price of 900 rupees as well. Now, the last brokerage report that we have is on L&T Finance, and this is from Morgan Stanley that they have. Underweight rating, a target price of 143. They remain cautious on L&T Finance, and with a profit to book value of about 2.3 times, and that's something that you're given to understand. They also expect an ROE emergence to be slow, driven by compression in the risk-adjusted NIM and return on assets as the business de-risks, and loan growth moderation and over-capitalization as well. So those are some of the brokerage houses that we need to keep an eye out on. Remember, viewers, this is also the day when there will be in the IPO segment new debut listings that we are waiting for. Canada Rebecco Asset Management Company and Rubicon Research. They will be making their D Street debut today at 10 a.m. And we will also see Midwest IPO entering the second day of subscription. So even on the IPO space, there is a lot of action that you can definitely expect at this point in time. Let's quickly look at how the markets are settling in the pre-open trade, 25,394. So we are hoping for a 70 point of a gap up start yet again in today's trade at 950. We'll take a short break right here, but when we return, we will be talking more about the market moves that you can expect going forward from today, and of course, market strategies from Market Master. Stay tuned. Today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today. All right, viewers, the markets have opened in the green today. Let's quickly look at what is the opening action like. On the Nifty, you have 25,395, 71 points higher in trade. We're inching further up and 25,400 could soon be on your screens. 0.3% up as far as the Nifty is concerned. And we now hope that 25,400 and the attempt to again move towards 25,500 is not ruled out, at least for today. What are the key kind of sectors that you need to watch out for? Remember, it's also the day when there is Sensex contracts expiry. Today, Sensex is opening by 0.2% higher in trade. You have the Nifty Bank that's opening about 0.5% up. So the banking space is clearly in focus at 56,800 odd levels is what I can see at this point in time. 1313 advances to 425 declines, which means the market breadth is also on the positive side. The mid caps are also opening higher by 0.1% odd in the trade right now. Let's also look at some of the other key parameters that we should. Axis Bank, the first number that we should be watching out for after earnings, opening higher by 2.8% at 1203 odd levels post the earnings. You have other banks also like Kotak Mahindra Bank, ICICI Bank also opening on the positive zone. And amidst this entire banking move that we are seeing in trade, Axis Bank is the top mover. Eternal follows next. You also have Adani Enterprises, Kotak Mahindra Bank, also Bajaj Auto and Eicher among the top movers. Whereas on the declining side, post the earnings, HDFC Life has flipped in trade. You also have some of the other names that are declining towards the end, towards the beginning of the session as well in the trade today. Let's actually pull up the top laggards in point in case there are a few and far between stocks that are declining because the market breadth is still positive at this point in time. But some more result reactions that you should be watching out for. MRPL 7% higher, or 8% higher rather, after the Q2 impact. KC International, there's an auto win impact, and 0.3% of an uptick can be actually seen on that one. But insurance majors are all down after HDFC's 4% decline. Now you also have SBI Life now declining in the trade right now. You also have Infosys ahead of earnings, that's down. Also have TCS that's declining downwards. So the IT stocks have actually slipped towards the lower end today. KEI Industries is now 7% higher in trade. We also have Mitesh Panchal to track the technicals with us now on the show. Mitesh ji, warm welcome. Good morning to you. Help us understand your take on the markets as we again make an attempt to go beyond 25,400. How do you see the markets in the run up to Diwali? Finally, the festive cheer is coming back to the street. Will it be sustainable, sir?
Good morning, Sakshi. Good morning to all our viewers. Let's talk about the index first. Again, we are traveling into the zone from where we have slipped last time. So 25,448 is the high last time which we have made, and from there we have seen a good amount of correction. So we are of the view, Sakshi, that this time around at this level 25,500 to be very precise, we might see some sort of a resistance. It might take 1 or 2 days for the indices to cross, but we are of the view that the recent bottom which it has formed, we don't think so. The indices are planning to revisit that. So going forward, I think 25,500 is taken out. We are entering into a new trading zone wherein our targets are 25,800, 26,200. Much more comfort is coming with respect to the Bank Nifty because it has successfully crossed its immediate resistance level of 56,500. So right now the futures are trading at 57,200. We are looking at a reversal, and we are of the view that 59,000 on the upside can be the target in the next few weeks. So far, we are of the view that the recent bottom is in place, and indices are now marching towards making an all-time high. So any dip going forward should be bought into.
Okay, got that. Mitesh ji, in the run up to Diwali, any key stocks that are coming onto your radar that you want to just bring out at the outset for all our viewers?
Absolutely. So three Diwali picks you can say, or you can name it like I mean, you can tag a name like anything. So first is GMM Fodler. We are of the view that the way by which the stock has formed a bottom in the range of 1,000 to 1,050. I think GMM Fodler is up for the next whole year, and we are expecting around 50 to 60% upside in next 1.5 year. So the first preferred pick is GMM Fodler as far as the Diwali pick is concerned. Second, we, as I said, Sakshi, we have been bullish for the calendar year 2025 on commodity. We continue to believe that commodity is likely to play a key role going forward in generating the wealth. So I think Tata Steel is what the second stock which we are looking at. We are of the view that slowly, gradually, stock is inching higher and probably enter into a new trading range with a target of around 250 to 280. So Tata Steel is the second bag. Third, what we like from the commodity basket is Ambika Cotton Mill. So again, that stock is looking pretty interesting. So far in last few years, the stock has disappointed, but we are of the view that going forward, probably Ambika Cotton Mill will surpass the levels of 1450, that is an immediate resistance, and enter into a new trading range between 1800 to 1900. So what we are witnessing right now is that commodity play will continue to dominate in the first half of calendar year 2026. So the first pick from the commodity basket is Tata Steel, followed by Amiga Cotton Mill. And after a long consolidation, we are of the view that GMM Fodder will come back into the game.
Okay, got that. So all our viewers have got all the Diwali picks right in the beginning of the show. I hope you've noted that down. And of course, throughout our conversation, we will be talking about a lot on the sectors and the outlook. So stay tuned for that. Mitesh ji, let's start off with the earnings reactions and how are you looking at some of the numbers there? Axis Bank came out with the numbers. We also have a slew of other NBFC names, HDB Financial that came out with the numbers, L&T Finance also came out with the numbers. Banking and finance, what has stood out for you on Axis Bank post earnings? What would you do?
Okay, so as far as you know, Sakshi, we are technical guys who can't afford to comment on the fundamental side of it. So as far as the chart patterns are concerned, as far as our system and methods are concerned, we are more comfortable with the PSU bank as compared to the private bank.
Okay.
So I think Can Bank, Bank of Baroda, State Bank of India, and PNB, these are the four prominent banks from the banking PSU bank banking sector which we like right now. And we are of the view that going forward, probably out of this, Bank of Baroda will outperform. That is how the chart looks like. So if you look at the entire chart pattern of Bank of Baroda, from 250 onwards, it is making heart of higher bottom formation on hourly chart, and we are absolutely comfortable at the current level with a stop of 240. So we are of the view that the stock likely to enter into a new trading range and test around 320, 350 going forward. So Bank of Baroda, Can Bank, PNB, and SBI are favorites as far as the PSU space is concerned. As far as this private space is concerned, we are not that bullish as of now, technically. But what stood out for us from the private bank is ICICI Bank. So we are of the view that ICICI, the chart structure of ICICI Bank, is looking pretty promising as of now at 1403. At 1380, with a stop of 1380, one can go long for the potential target of 1450, 1480. So from the private bank, it's all about ICICI. From the PSU basket, it's PNB, SBI, Can Bank, and State Bank of India.
Okay, got that. Miteshji, let's also talk about some of the other names. HDFC Life also came out with their numbers. It slipped in trade post after that as well. The insurance basket, what is your take right now? What are the charts indicating there? We have had recent IPOs also coming into the same life insurance space. Canada HSBC Life has also come in. So the space is getting more and more crowded. We have more players that are coming in. We do know that on ground, there is a situation that the country is still underpenetrated when it comes to insurance. The government is taking steps like GST cuts to promote, lower premiums and affordable premiums so that the insurance penetration is taken deeper. But at the same time, many companies are still struggling to maintain their VNB margins and, see a competitive hedge over each other. How are you looking at the insurance basket at this point?
So per se, we are following weekly system and method in which a few stocks have qualified as far as the systems is concerned. So we are of the view that yes, there is going to be a re-rating, Sakshi, in the entire insurance space. So be it an SBI Life, be it an ICICI Pru, ICICI General Insurance, we are of the view that this space is going to get attraction. But what need to be very clear with respect to the participation rule is that it is just like what we see in case of the entire broking basket or entire insurance basket, is that it's more like a commodity play. So that the run up in the stock prices come up only for a specific period of time. After that, these stocks are going for a consolidation for a longer period of time. So we are of the view that as of now, one can go long and form a long position in these specific stocks. But if you are getting 20, 30, 40% return going forward in the next a few quarters, advisable to get out, because once these stocks gets into the consolidation zone, you will have to wait for a longer period of time.
Okay, got that. Let me also look at the markets yet again, viewers. The markets are gaining strength. You can see 25,000 for 20 odd mark right now. We're 100 points higher in trade almost on the markets. Mitesh ji, do you see this high also getting sold into, or do you think the momentum will carry on till Diwali at least?
No, I think the momentum will carry on, and the precise reason for that, Sakshi, is that Reliance is coming back on the surface now. So now the big boys are actually, getting the buying interest. So Reliance at 1385, we are of the view that comfortably it will cross 1450, 1500 going forward. Apart from that, if you look at, as we have mentioned, State Bank of India is looking promising at this point of time. I think 950, 1000 level can come at any given point of time. Even we have recently taken a contra bet in three sector: IT, FMCG, and pharma. So I think ITC will come back and probably get into the range of 450 to 480. So we are comfortable as of now looking at the contribution of the big boys in the Nifty basket. So we don't think so this rally will sold into. Probably as we go forward, the rally will build on its own, and we will see 25,800, 26,200 sooner than later. Because of late, Sakshi, if you notice, I think now Bajaj Auto and Maruti is coming back with a big volume on the charts. So I think there is a support from auto as well. The laggards are now going to perform going forward. So we are of the view that yes, 25,800, 26,200 is here on the card. At this point of time, not advisable to carry the shorts or to initiate the shorts. If you don't want to go long, no problem, but advisable not to carry shorts.
Okay, fair point. Let me also just look at some of the other aspects that we should be watching out for today again. The other aspect that I wanted to drive is auto space, like you pointed out. Hyundai Motors is something that I wanted to discuss, and Tata Motors is something that I wanted to discuss as well. These two specific stocks, there are reasons behind it. One, Hyundai has recently talked about its doubling down of its investments over the next 5 years into India. In fact, it's tripling down its investments into India, hoping that India will become the next second biggest market for Hyundai Motors company after the US, with this kind of an investment, newer launches, product development that they're focusing on. 45,000 odd crore rupees is the investment amount that they plan over the next 5 years till FY30. So one is that brokerage houses are penciling in higher targets of above 3,000 odd levels for Hyundai Motor at this point in time. The stock is up by 1%. One is this: Tata Motors recently has demerged its company into two parts, passenger vehicles and commercial vehicles. Now, what we see is the price that is getting reflected as far as the passenger vehicle business is concerned, slightly subdued from what it opened at 400 rupee levels 2 days back. Now, commercial vehicles business will only get listed after a month or so. But if people had this stock in their portfolio, say 2 days back, they will be eligible for one free share for every one share held for the passenger vehicle business also. Now, let's try and understand on both these stocks. Mideshji, what's your view and how would you look at them?
Yeah, so more will make you more. So people are not interested in Hyundai as well. And let me give you some statistics, Sakshi. For the quarter ending 20th of March 2025, the stock has made a low of 1,551. And for the quarter ending 30th of September 2025, the stock has made a high of 2,890. So in just 6 months, that is in two quarters, that is the quarter ending June and the quarter ending September, Sakshi stock has delivered 86.33% return. Now, which stock from the same space has delivered such a huge return in 6 months? So, we are of the view that the rally which has started in Hyundai Motors will continue going forward. And probably, yes, I agree with the people who have put a target of 2,800, 3,000. Probably we are going to taste that sooner than later. But the story is not that rosy for Tata Motors. So, let us look at Tata Motors now. So as far as Tata Motors is concerned, again there are multiple resistance on the quarterly charts which it had formed, Sakshi. For the quarter ending 30th of June, 450 was the high. Quarter ending September, 439, ending the current quarter, 447. So we are of the view that unless and until if the stock is not crossing 490, which is the high of the quarter ending 20th of March 2025, we don't see any re-rating. So probably till that there will be a big consolidation zone in which the stock will move. On the upside, 450 is a strong resistance. On the downside, 360 is the strong support. So between 360 and 450, stock will consolidate. Once the stock give a close above 490 on a weekly chart, there will be a serious re-rating. And after that, Sakshi stock will likely to post a new high, all-time high. Recently, the new all-time high which we have seen was at around 713 rupees on 30th of for the quarter 30th of September 2024. So we are of the view that as of now, one should not be in a hurry to buy the stock. Wait for it. Wait for the breakout, which is going to happen above 490. Till that, leave this counter. There are good opportunities within this space. For an example, as of now, given the choice, I would like to go ahead and buy Ashok Leyland as compared to Tata Motors. So in Ashok Leyland, if you see,
Okay,
hello.
okay, got that. What about Ola Electric? That's also on the move. If you could share a view on that as well. 2% higher in trade today at 53 odd levels. Are things improving for the better?
On the charts, not at all, because the recent high was at 71 and the stock has sold from that level. So we are not that bullish in Ola right now because for 3 quarters, that is 3 months, that is August, September, and October, the stock has rallied smartly from 39 levels to the tune of 71 with a strong volume. After that, the rally has sold into. So again, Sakshi, I'll pick up the stocks only when it moves above 71.
Okay, got that. Let me also take another view from you on some of the movers that we are seeing in the Top gainers list as far as the move is concerned on Nifty 500. ITI Limited, it's been moving up for some time now, 6.7% higher. Videshji, if you could look at the charts, I'll come to you for that also. Let me also mark out what are the other big movers today. MRPL we marked out for you. It's the result reaction, 5.5% higher. BLS International Services is also now up, 4.7% up. Alok Industries is up 4%. RCF, that's another one that's on the boom. Westlife Development, and also we have Craftsman Automation that's also up and about in trade. These are some of the top gainers in the Nifty 500 basket as of now. Mitishji, your sense on ITI?
So now, as far as ITI is concerned, Sakshi recently has made a high of 372, and we are not comfortable with the kind of volume which the stock is clocking right now. So we don't think so. Going forward, it is advisable to participate in this stock. Probably, if you have and if you bought it at a lower level, you can exit at as of now. But we are not comfortable with the kind of volume it is generating. So for us, it's an avoid right now.
Okay, got that. Let me also just bring up the IT sector for you, Mitesh ji. Since this entire space will be also in focus today. Today, Wipro and Infosys will come out with the numbers. Yesterday, we had seen the reaction for Tech Mahindra and Persistent also. Before that, TCS, HCL Tech have already come out. With today's numbers also coming in, at least the top four companies would have reported the earnings. So by tomorrow, we will have a clarity as to how large cap big four companies have reported. So TCS, Infosys, HCL Tech, and Wipro, all four would have reported, and that will also give us some clarity as to what's happening in the large cap basket. But so far, from the numbers that have come in, any sign of green shoots?
So what we are looking at, Sakshi, chartically is that even if I plot Nifty IT and if I plot the big boys, we are of the view that in the next 6 to 9 months, 3 to 6 months, sorry, there will be a consolidation followed by a strong upmove. So what we are recommending our clients is to go long in three mutual funds. So we ask them to participate through SIP mode in three mutual funds and take an exposure into IT sector. First, what we have recommended is SBI Technology Opportunity Fund. Second, what we have advised them is Tata Digital India Fund. And third, what we have advised them is ICICI Prudential Technology Fund. So we are of the view that probably in the next 3 to 6 months after consolidating in a broad range, all these stocks and the Nifty IT will outperform. And what we are looking at is that, Sakshi, there is a strong re-rating in the next 3 years. So what we have taken a long call over here. So we are of the view that one can achieve 22 to 25% CAGR if you have a patience for the next 3 to 4 years. And this is the right time probably to participate into IT sector through SIP mode. So this is what we are advocating right now to our client. As a disclaimer, I don't have any position in the mutual funds which we have discussed, but our client, since we have recommended, they might have direct or indirect position in these mutual funds.
Okay, fair point. Let me also look at the markets yet again. We are picking up further pace, 0.4% higher in trade. So I have about 24,000, 430 odd mark that's coming in at this point in time. So yes, we are at the day's high. This chart is on your screen, so keep at it at this point. We are also looking at Sensex garnering strength, 377 points higher. Then you also have the banks that are pulling up pace. You have some IT names that are also pulling up higher in trade. But let's also talk about the precious metals that have so far been in a super cycle of sort. And try to understand, what means, this is, we have discussed this many times over with Mideshji, and this is the right time to again look at that, since we have fresh levels every time we get back into a conversation with you, Mideshji. Gold and silver prices have surprised all of us with the kind of rally that we have seen. Silver, with its run up, in fact, crossing over that 1,92,000 odd mark in the futures category, has, as of yesterday, has in fact doubled investors' money. Some of the silver ETFs have also doubled investors' money in this year alone, which means over 100% rally in some of them too. What's your sense as far as gold and silver is concerned? Because Saturday is when we will be having Dhanteras. This is usually the time when people buy gold and silver, but jewelry stores have been waiting for people to knock at their doors because the footfalls have been missing amidst all these high prices. At this time around, what is exactly your thought as far as gold and silver is concerned? At these high prices, should one rather look to book profits, or should one look to still enter afresh?
Yeah. So, Sakshi, let us again make a very simple statement: is that please look at this asset class if you are investing from an investment viewpoint, because people who have gold for the consumption purpose are also attaching investment purpose with that. So please segregate these two. Now, if you are an investor, if you have bought at a lower level, what we have recommended is that you can exit partial position. So depending upon the risk reward profile, you can book 70%, 60%, 40% profit in the existing long position. Second, what is left out with you, because since the metal is on a run up, so we don't know whether it will make a high at top at 190 or 2 lakh or 2 lakh 50,000 rupees. We don't know. So the simple and the boring strategy is to remain long on the partial position with a trailing stop loss. So for an example, if I'm looking at the future right now, it is the silver future is quoting at 166. So I will have a stop of 120 and carry my 30% long position. So the strategy is simple. You exit 70%, 80%, 60%, 50% based on your risk reward profile, and remaining position you can continue based on the trailing stop loss strategy.
Okay, got that. So I hope this has also given you some understanding, viewers, as to how to look at these running up precious metals at this stage in time as well. Okay, Mitesh, if I have to ask you now to help all our viewers who may be looking to rejig their portfolios in Diwali, or maybe starting up afresh as well after this underperformance in the markets that we have seen for the last 1 year, now hoping that a lot of consolidation has played out, maybe this is the right time for me to invest, and maybe over the next coming year things will improve for the better. If somebody is thinking that, in the portfolio, if you could mark out any top two or three themes that you believe over the new somewhat is going to be or are going to be outperforming.
Yeah, so Sakshi, we are bullish on three sectors. First is IT, second is FMCG, and third is pharma. We are of the
Okay.
view that one should start taking partial positions in these three sectors through mutual fund route only, because all these three sectors, if you look at the dominant or the large cap stocks, they are having a high value. So with 50,000 rupees, you cannot have a basket of Persistence, Dixon, Infosys, TCS, Wipro. Advisable to participate it through SIP mode in these three sectors. So per se, we are of the view that these three sectors are on the verge of a consolidation. In the next 3 to 6 months, the consolidation will be over. And what we are penciling in is around 22 to 25% CAGR over the next 3 to 4 years. So an exact time to participate in these three sectors with respect to the mutual fund route. Now, as far as the stock picking is concerned, we are of the view, Sakshi, which we have repeatedly said in last 6 months or so, that even 25, 20, calendar year 25, along with the calendar year 26, is all about commodities. So one should focus on three sectors. First is metal, second is fertilizer, and third is sugar. And when you're talking about focusing on the commodity sector, always advisable to go with the leaders. So as far as the commodities, sugar is concerned, we recommend EID Perry and Bajaj Hindustan. As far as the Balrampur Chini, sorry. As far as the metal is concerned, we recommend Hindalco and Tata Steel. As far as the fertilizer is concerned, we recommend Chambal Fertilizer and Coromandel Fertilizer. So these are the three sectors which we think will give a good amount of return in next 1 year window. This is a trading call. So commodity play is for 1 year, and IT, pharma, and FMCG is for the next 3 years.
Fantastic. So, all of our viewers who've been waiting out to find out the right kind of sectors to get into this Diwali, what kind of stocks to look at, and these are the right, spaces that Mideshji believes as a trader you should be definitely looking at, over the next 1 year to, create wealth for yourselves as well. So, look at it, and definitely we'll be, finding out more such ideas throughout the course of the new Samvat as well. So, this is the right time in case you've not started yet to start developing your portfolio at this stage as well. Let me now come to some of the other key spaces as well, and ask you on specifically when it comes to the hard metal space as well, which has started to show us some uptick. Last time around also we spoke about it, Miteshji, from precious metals to hard metals. Do you see a super bull run also flowing into the hard metals as well? Could you unmute yourself, sir?
Sorry, yeah, with respect to the hard metals, actually, we are absolutely bullish on that. In fact, on the MCX platform, we have recommended our client to go long in aluminum, lead, zinc, and copper. And as I said, I think going forward, Steel Authority is looking pretty fantastic chartically. Hindalco is looking good. Nalco is looking good. Tata Steel is looking good. So yes, definitely, hard metals are also looking good at the current level.
Okay, fair point. So the hard metals are also looking good at this point. What about defense and railways, Miteshji? Do you think they will make a comeback in the new summer?
Possibly yes, but again, the space will test our patience. So for the next 3 to 6 months, what I see is a broad consolidation. So far, we doesn't have any view on that. It's in the silent mode. Let us wait for the next 3 to 6 months. Probably we will get an answer.
Okay, fair point. Let me also ask you on one of the most buzzing spaces in this Samvat, and that has been the platform spaces, the new tech spaces as well. We have discussed this many times over too, but how will the new Samvat be for the likes of Zomato, Swiggy, for maybe even the other names from PB FinTech to a Paytm, from Nykaa to a Mama Earth? How are you looking at all of these tech focused companies?
Yeah, so platform companies are making comeback, Sakshi. There is no doubt about it. There are strong possibilities that in the next 3 to 6 months, this space will dominate and probably be a part of the core portfolio. But that is where exactly we guys are going to make the mistake. These are the trading bets, so one should not mix up trading bets with the investment. So you can whatever names you have spoken about, we should consider that as a trading game, and probably for the next 3 to 6 months you can play this game and with a trailing stop loss. But as far as the investment idea is concerned, or should I buy it for more than 20-30% gain? The answer is no, because the moment the sell strikes or the sell side starts in this kind of stocks, it is difficult to exit. So just have a view only from the trading perspective.
Got it. And towards the end, Miteshji, first half an hour of the candle is nearly formed. Your suggestion for today, and where should one's focus be between Nifty and the Nifty Bank?
Obviously, so given the choice, I would like to go long in Bank Nifty at 53,100 spot level with a stop of 56,500. For the next 1 week, I will hold on to Bank Nifty with for the potential target of 58,000. As far as Nifty is concerned, at 25,430 spot level with a stop loss of 25,350, that is 80 pound stop loss, I will definitely go long for the next 2 to 3 days and expect 25,500, 25,600 on the.
Okay, got that. Thank you so much, Miteshji, then for being with us and for helping us with an insight on the overall market and the new Samvat as it begins this Diwali. I wish you, your teammates, as well as your all loved ones, a very happy and prosperous Diwali ahead. And we will, of course, see you in the new Samvat to continue to guide all our viewers in the new year as well. Thank you so much for being with us.
Thank you, Sakshi, and same to you. Great year going forward to you and the entire BTTV team.
Thank you so much. With that, viewers, we wrap up this morning trading action with the Nifty still holding up, that recent dip also getting bought into. So the bulls are not leaving yet after the first half an hour is what we are given to understand, 25,432. Let's see how the day pans out in trade, and will we make an attempt to cross beyond 25,500, or will resistance be again at play? That's something that we will tell you, but do stay tuned. And in case you have some questions about how to look at some stocks and your portfolios in this Diwali, what to invest and where to exit from, where to book profits from, then ask away all your questions on daily calls at 12 noon as we get you Diwali special daily calls coming in today. Thank you so much for being with us. Stay tuned.
Hello and welcome to Business Today TV. You're watching our Diwali special Market Masters. Plan, profit and prosper with Business Today TV this festive season. Today we're joined by Siddharth Zarabi, Group Editor, Business Today, and our special guest, Ramdev Agrawal, Chairman and Co-founder of Motilal